Let's dive into the recent news that came in from Japan and United Kingdom, where they both have slipped into what seems to be a technical recession during the September to December period of 2023. Now, this event made quite a splash in the headlines, mainly because of the significant economic stature of these two countries. Let's first understand what exactly a recession is. Now, in economic terms, a recession is typically defined as experiencing at least 2 consecutive quarters of economic contraction, or what we commonly refer to as negative growth in the gross domestic product, or the GDP. Now, GDP essentially represents the total value of goods and services produced within a specific time frame. When GDP rises, it signifies a thriving economy. Conversely, when GDP declines, indicating negative growth or economic contraction, it indicates economic struggles. Now, if this downturn persists for 6 continuous months or more, it's officially labeled as a recession. However, it's important to note that while the 2-quarter rule is a widely used guideline, identifying a recession can be a lot more complex in practice as such. Now, let's delve into what's been happening with global economies. In the case of the United Kingdom, its GDP fell by 0.3% in the 4th quarter, which is the September to December period. Now, this decline followed a 0.1% decrease in the previous 3 months as well. Now, one of the significant factors contributing to this downturn is the impact of the inflation shock, coupled with historically high interest rates, which have dampened consumer demand in not just the UK, but other countries as well. Looking at Japan, its GDP contracted at an annualized rate of 0.1% during the September to December quarter, after a 0.8% decline in the previous quarter. Now, it's not just Japan and UK facing economic challenges. Ireland and Finland also slipped into technical recessions during the 4th quarter of the same year. Now, furthermore, amongst the countries that released their GDP results for the 4th quarter, 6 reported contraction for the first time during that period. These countries include Malaysia, Thailand, Romania, Lithuania, Germany, and Colombo. Additionally, at least 14 other countries experienced a decline in GDP during the July to September quarter, with their December quarter results yet to be released. Now, India retains its position as the fastest growing nation in the world amidst all of this. The International Monetary Fund said the economic growth in India was projected to remain strong at 6.5% in both 2024 as well as in 2025. While India's GDP has been performing relatively better, no country is immune in the era of globalization. External headwinds are poised to hurt India's economy too. UK and Japan are major trade partners, and other countries are some of our major trading partners. For instance, UK and Japan contribute about 2.5% and 1.2% to our total exports. Now, the recession impact is already being witnessed in India's services sector. The Indian IT industry is facing sluggish growth and challenges in getting new deals as companies are cutting down on IT spending and saving on costs. Now, in a nutshell, while India's relatively strong economic performance provides a buffer against some of these challenges, proactive measures and strategies may be necessary to navigate the external headwinds. With that, this is Raj Mehta signing off, wishing you and your loved ones the very best. Thank you.
Did you like watching this video? Then download our app, Informed Investor, to watch more such informative and interesting videos.
Equity investments are subject to market risk. Read all investment-related documents carefully. Visit www.researchandranking.com